Imagine if I gave you just 100,000 today. Not a million, not a fortune, just $1,000. Most people would spend it. Some would save it, but a smart investor would turn it into a financial turning point. In 2026, the difference between getting rich and staying stuck is not how much you earn. It's how intelligently you invest small money early. Today, I'm going to show you the best ways to invest $100,000 in 2026. These are not risky gambling ideas. These are practical, modern strategies used by smart investors to grow wealth steadily. Whether you're a beginner or already investing, this speech will give you a clear roadmap to make your money work for you instead of sitting idle. Let's break down the smartest moves you can make with just $100,000. Index funds and ETFs are often called the backbone of smart investing, and in 2026 they remain one of the most reliable ways to grow a small amount of money into real wealth over time. The reason is simple. Instead of betting on a single company, you are buying a tiny piece of hundreds or even thousands of companies at once. This spreads your risk and smooths out the ups and downs that individual stocks experience. When you invest in an index fund, you are essentially investing in the overall market. If the economy grows, your investment grows with it. History shows that broad markets tend to rise over the long term, even though they move up and down in the short term. That is why index funds are popular among professional investors, retirement funds, and even billionaires who prefer steady growth over risky bets. ETFs work in a similar way, but they trade like stocks on an exchange. This gives you flexibility and transparency, and you can start with very small amounts. With just $1,000, you can instantly diversify your money across multiple sectors like technology, healthcare, finance, energy, and global markets. This diversification is powerful because no one sector wins every year. By owning them all, you position yourself to benefit from whichever sector performs best. Another key advantage of index funds and ETFs is low cost. Traditional mutual funds often charge high fees that eat into your returns. Index funds and ETFs typically have very low expense ratios, which means more of your money stays invested and compounds over time. Over decades, this difference in fees can add up to tens or even hundreds of thousands of dollars. Consistency is where index investing truly shines. You are not trying to predict the next big stock or time the market perfectly. Instead, you are committing to steady investing and letting compounding do the heavy lifting. Even small, regular contributions can grow significantly over time when combined with the natural growth of the market. In 2026, with global markets becoming more accessible through apps and platforms, index funds and ETFs are easier to buy than ever. They are suitable for beginners who want a simple, low-stress approach, and they are also used by experienced investors who understand that boring investments often produce the best results. Most importantly, index funds and ETFs teach you discipline. They shift your mindset from short-term speculation to long-term wealth building. With $100,000, you may not feel rich today, but invested wisely in broad market funds, that small amount can become the foundation of a powerful financial future. High-yield savings accounts and money market funds are often underestimated, but in 2026 they play a critical role in a smart investment strategy, especially when you are starting with a small amount like $30,000. These options focus on stability, liquidity, and steady returns, which makes them ideal for protecting your capital while still earning more than a traditional savings account. A high-yield savings account is designed to pay a higher interest rate than regular bank accounts. Instead of your money sitting idle, it works quietly in the background, generating interest every day. The biggest advantage is safety. Your funds are typically insured, which means even if the bank faces trouble, your money is protected up to a certain limit. This makes high-yield savings accounts a strong choice for emergency funds or for investors who want peace of mind. Money market funds take this concept a step further. They invest in short-term, high-quality financial instruments like government securities and corporate debt. These funds aim to preserve your capital while offering slightly higher returns than savings accounts. They are considered low risk and are widely used by institutions, corporations, and conservative investors who prioritize stability. One of the biggest benefits of these options is liquidity. You can usually access your money quickly without penalties, which is important in uncertain times. If an opportunity arises, or if you face an unexpected expense, your funds are not locked away. This flexibility gives you control, which is often more valuable than chasing high returns with high risk. In 2026, interest rates and financial products continue to evolve, and many digital banks and platforms offer competitive yields. This makes high-yield savings and money market funds attractive even for younger investors who want a safe base while exploring other investments. They can act as a financial buffer that protects you from market volatility. Psychologically, these investments also build discipline. Seeing your money grow steadily, even if slowly, reinforces the habit of saving and investing. It reduces the temptation to spend impulsively and helps you develop a long-term financial mindset. While these options may not make you rich overnight, they are essential for financial stability. Wealth is not only about aggressive growth, it is also about protecting what you have and ensuring that your financial foundation is strong. With Funds, placing a portion in high-yield savings or money market funds can give you security, flexibility, and a reliable starting point for your broader investment journey. Fractional stocks have changed the game for everyday investors, and in 2026 they are one of the smartest ways to build wealth with limited capital. In the past, buying shares of top companies required thousands of dollars. Today, you can own a piece of the world's most powerful companies with just a few dollars. This makes the stock market accessible to almost anyone with others and $1 or even less. When you buy fractional shares, you are purchasing a portion of a single stock rather than a full share. This means you can invest in companies like major tech giants, global consumer brands, or industry leaders without needing to buy an entire share at full price. Your investment grows as the company grows, and you receive proportional returns just like a full shareholder. One of the biggest advantages of fractional investing is precision. Instead of being forced to buy one expensive stock, you can spread your $4,000 across multiple strong companies. This gives you diversification while still focusing on high-quality businesses with proven track records. It allows you to build a mini portfolio that reflects your beliefs about the future economy, whether that includes technology, healthcare, renewable energy, or global consumer trends. In 2026, many platforms offer commission-free trading and easy access to fractional shares. This reduces barriers and encourages consistent investing. You can invest small amounts regularly, which helps you benefit from dollar-cost averaging. This approach reduces the risk of buying at the wrong time and smooths out market volatility over the long term. Another powerful aspect of fractional stocks is compounding. When companies pay dividends, you can reinvest those dividends into more fractional shares. Over time, this creates a snowball effect where your investment grows faster as your ownership increases. Even small dividends, when reinvested consistently, can significantly boost your portfolio over many years. Fractional investing also teaches you to think like a business owner. Instead of trading randomly, you begin to evaluate companies based on fundamentals, growth potential, and long-term value. This mindset shift is crucial for wealth building. You stop thinking like a gambler and start thinking like an investor who owns a piece of real businesses. There is also a psychological benefit. Owning a share, even a small fraction, of a powerful company can be motivating. It makes you more engaged with financial news, market trends, and economic shifts. This awareness builds financial intelligence, which is one of the most valuable assets you can develop. Of course, individual stocks carry more risk than broad index funds. Companies can underperform or face challenges. That is why fractional stocks work best when you focus on high-quality companies with strong fundamentals and long-term growth potential. The goal is not to chase quick profits, but to participate in the growth of businesses that are shaping the future. With Funds in 2026, fractional stocks give you access flexibility and growth potential that was once reserved for wealthy investors. When used wisely, they can become a powerful engine for long-term wealth creation. Cryptocurrency and blockchain assets continue to be one of the most talked about investment areas in 2026, but the smartest investors approach this space with caution and strategy. With Funds, crypto should not be about chasing hype or trying to get rich overnight. It should be about gaining exposure to a new technology that could shape the future of finance, data, and digital ownership. At its core, blockchain is a decentralized system that allows people to transfer value and information without relying on traditional banks or intermediaries. This technology has already transformed payments, digital contracts, gaming, and even identity systems. Cryptocurrencies are the fuel that powers these networks, and owning them means you are participating in this evolving digital economy. One of the biggest opportunities in crypto is long-term growth. Early investors in major cryptocurrencies saw massive gains because they believed in the technology before it became mainstream. In 2026, the market is more mature, but innovation is still happening fast. New use cases, institutional adoption, and regulatory clarity are shaping the industry, which creates both opportunities and risks. For a smart investor, crypto should be a small part of a diversified portfolio. It offers high potential returns, but it also comes with high volatility. Prices can rise rapidly and fall just as quickly. That is why disciplined investors allocate only a portion of their capital and focus on long-term holding rather than short-term trading. Another important aspect of crypto investing is education. Understanding wallets, exchanges, security, and blockchain fundamentals is essential. Unlike traditional banks, you are often responsible for your own security. This teaches responsibility and digital financial literacy, which are valuable skills in the modern world. Crypto also opens doors to new forms of investing, such as decentralized finance, tokenized assets, and digital collectibles. These areas are still developing, but they represent a shift in how value is created and exchanged online. Being exposed to this ecosystem can position you ahead of the curve as digital assets become more integrated into daily life. Psychologically, crypto investing tests your patience and discipline. Market swings can trigger fear and greed, but successful investors learn to stay calm and stick to their strategy. This emotional control is a key trait of financial experts and long-term wealth builders. With 100,000, crypto should be viewed as a growth option, not a guarantee. It is a bet on the future of technology, finance, and digital ownership. When approached with caution, research, and a long-term mindset, cryptocurrency can be a powerful addition to your investment strategy in 2026, offering both financial potential and valuable experience in the evolving digital economy. Investing in yourself is often the most overlooked strategy, yet it is one of the highest return investments you can make with Fractional in 2026. Unlike stocks or crypto, skills and knowledge cannot crash overnight. They stay with you for life and can increase your earning power year after year. When you improve your abilities, you are not just growing money, you are upgrading the machine that generates money. In today's economy, income is directly linked to skills. Digital marketing, programming, data analysis, content creation, finance, design, and communication are in massive demand. A single high-value skill can multiply your income far more than any traditional investment. Spending 100,000 on courses, certifications, tools, or mentorship can open doors to better jobs, promotions, freelancing opportunities, and businesses. The compounding effect of education is powerful. When you learn a new skill, you increase your value in the marketplace. That leads to higher income, which gives you more money to invest, which then creates more wealth. This cycle repeats itself. Many millionaires credit their success not to luck or inheritance, but to continuous learning and self-improvement. In 2026, learning is more accessible than ever. Online platforms, AI tools, and digital communities allow you to learn from top experts around the world. You can build skills from your home, at your own pace, and often at a fraction of the cost of traditional education. This democratization of knowledge means your biggest limitation is not money, but commitment and focus. Investing in yourself also builds confidence. As your knowledge grows, your decisions become smarter. You understand markets better, negotiate better, communicate better, and think more strategically. This confidence spills into every area of life, from career to relationships to financial decisions. Confidence itself is a powerful asset. Another hidden benefit is adaptability. The world is changing rapidly. Jobs that exist today may disappear tomorrow. New industries are emerging every year. When you invest in learning, you future-proof your career. You become someone who can adapt, pivot, and thrive in any economic environment. That resilience is priceless. Self-investment is not only about technical skills, it also includes mindset, productivity, health, and communication. Books, coaching, and personal development tools can reshape how you think about money, risk, and opportunity. Many people stay poor not because they lack money, but because they lack financial literacy and growth-oriented thinking. Changing your mindset can change your financial trajectory. With 100,000, you might buy a stock that doubles. But if you invest that same money in yourself, you could double, triple, or 10 times your lifetime earning potential. That return compounds for decades. Smart investors understand that their greatest asset is not their portfolio. It is their ability to learn, adapt, and create value. In 2026, the smartest investment may not be in the market, but in the person looking back at you in the mirror. Starting a micro business or side hustle with Funds ETFs can be one of the most powerful investment moves in 2026 because it turns you from a consumer into a creator of income. Unlike traditional investments that grow slowly, a small business has the potential to generate cash flow quickly and scale far beyond your initial capital. This is why many wealthy individuals started with a small side project that later became a major income stream. In today's digital world, the barriers to starting a business are lower than ever. You do not need a physical store, expensive equipment, or a large team. With a laptop, internet connection, and a small budget, you can launch digital products, online services, content channels, e-commerce stores, or consulting services. Your $30,000 can be used for tools, marketing, website setup, or initial inventory, giving you a real foundation to build on. One of the biggest advantages of a side hustle is control. Instead of relying solely on a salary, you create an additional income stream that you own. This diversifies your financial life. If your job changes or the economy slows down, your business can still generate income. This independence is a key factor in long-term financial security. A micro business also teaches you valuable skills that no stock or fund can teach. You learn marketing, sales, customer service, budgeting, problem solving, and strategy. These skills increase your business intelligence and can significantly improve your career prospects. Even if the business does not become huge, the experience itself is an investment in your professional growth. In 2026, the creator economy and digital entrepreneurship are booming. Platforms for content, freelancing, online courses, and digital products allow individuals to monetize their knowledge and creativity. A small investment can help you build an audience, develop a product, or automate systems that generate income while you sleep. This is where true leverage begins. Psychologically, building a business changes how you think about money. You stop seeing money only as something to spend and start seeing it as a tool to create more value. You become more disciplined, strategic, and forward-thinking. This mindset shift is one of the biggest differences between employees and entrepreneurs. A side hustle can also scale in ways traditional investments cannot. A stock might grow at a steady rate, but a successful business can multiply your income exponentially. Many entrepreneurs started with a small budget and grew into large brands because they focused on solving real problems and delivering value. Of course, businesses carry risk and require effort. Not every idea will succeed, but the potential upside is massive compared to passive investments. With Words 1000, you are not just buying an asset. You are buying an opportunity to create an asset that can generate income for years. In 2026, using a small amount of capital to start a micro business is not just an investment strategy. It is a pathway to financial freedom, skill development, and personal growth. When done thoughtfully, it can become the most transformative investment you make with your first $100,000. As we close, remember this $1,000 is not a small amount if you use it with intention. The market does not reward people who wait for perfect conditions. It rewards those who start, stay consistent, and think long-term. In 2026, you have more tools, access, and opportunities than any generation before you. Index funds, savings strategies, stocks, digital assets, self-education, and micro businesses are not just options. They are building blocks. Wealth is not built by one big move. It is built by thousands of smart, disciplined decisions made early and repeated often. Your first $1,000 can be the seed of a powerful financial future. The real question is not whether you can invest. The question is whether you will start today and let time do the heavy lifting for you.